What's up, traders? This is Greenwood Stocks and Intrinsic doing a market recap. Just wanted to go over the day and show you guys what we are doing strategically. What the stock's done, what we're thinking, our thought process in the midst of these trades, and ultimately how you can make money. So, started out early, super early this morning. Backing it up even to yesterday, had a stock called Very, as you see on the screen. So let me zoom in, and I see, first of all, it pops pre-market and it sells all the way off. So it doesn't look like much is there, but it does hold some sort of support. Okay, and we're looking at a stock that has almost no float. So it has a super small float, 1 million share float, which means doesn't take much buying. All right. So we know the stock is going to make a powerful move if it gets some volume. It got volume pre-market again, but we only traded 7, 6, 1. We traded about 15,000 shares, and it goes up 200%. Okay. So in my mind, my methodology, how am I trading these runners? There's 5 steps, of course. I'm researching, identify the trend or the sector, the catalyst, didn't see any of that. And then I'm looking at volume, and I'm entering based on support and resistance. So those are the 5 steps that I always talk about. Whenever I see a discount or a big sell-off, I'm always interested in getting in. That's the whole point. That's the whole methodology of business, economics, trading. You want a discount. When you go to the store, you're looking for a discount. You buy a house, you're looking for a discount. When you buy a car, you look for a discount. So same thing with stocks, looking for a discount. So I'm gonna walk you through my end, and then Intrinsic can give you his thought process and his methodology. Basically, when I seen this stock sell off, and a lot of people started tweeting about it, okay, and I can show you what we said. Let me pull up my Twitter so you can see what we were thinking. I mean, basically, I'm saying, look, this stock is going to get halted at the open, right before the open, okay. And because I see the potential, and I've seen this pattern before. So a lot of times when I'm trading, people ask me a lot of questions about, how do I know? It's just pattern recognition. I've seen stocks sell off super hard pre-market. They get ran down, they get flushed, and then they just run them back up. So it's like they're trying to take all the stops in the weak hands. So I see this stock at $13, and when it moves back up, then I think that it's going to continue, and it doesn't. So basically, I'm looking at the 5-minute chart. I drew trend lines. This was at 6 o'clock in the morning, Central Time. I drew my trend lines where it found support. Now, remember on the last video, and I keep saying it over and over and over again, when the volume continues to come and is consistent, okay, keep in mind, this stock had almost no volume prior to yesterday. I mean, look at the volume. Look, there's no volume, and now we're getting consistent volume. We're getting consistent volume all of a sudden, and the stock is making support. So you can put your money in on support. Where is it going to go? It's already tried to go past 14 several times. Okay. This is when I put my money in at 1409 was my first entry. Okay. And then it held support. All right. So what I'm thinking is they're trying to save this for a move when the market opens. Okay. So long story short, it held support. It ran up. I was happy. And so normally when they're getting ready to sell off, these stocks will sell right before the market opens. When they're getting ready to run up, the stocks will run up before the market opens. So got in right here, 1460. It made a higher support. Remember, higher lows. The floor becomes the ceiling. All right. So My plan was whenever this stock runs up, if it runs up, then I'm gonna put my stop somewhere where I'm in the profit. If it spikes down under 14, I'm gonna exit. Okay. Excuse me. So it got big volume. It got huge volume. Actually, let me switch to the 1 minute. It's gonna let me switch 1 minute. Yeah. So it starts getting huge volume. Huge meaning 300,000 shares traded. Huge volume, and then it sells off. So I'm like, man, what's going on? What the heck? I mean, I feel like I timed this perfectly. It's giving me all the ingredients to be a great trade. And then the next thing you know, it hits 13. I didn't put my stop in yet because I never want to get stopped out on one candlestick. We'll talk about that later. And then out of nowhere, it starts getting green volume. Volume starts expanding, like we talk about. Wherever the volume goes, the price is going to go with it. So boom, we got this candlestick and we got halted up just like I said. So I was happy, I was ecstatic, but I knew that there was going to be some resistance coming up, and I had to be aware of these $17 levels and the $20 level. So after I see the resistance, okay, when I see this resistance, then I prepared to put my stop in. And so it ended up running up. It flagged a little bit, made a new high, but I got stopped out at 1960. I got stopped out on this candlestick, I believe, right here. I got stopped out on 1960. So I made about I made a 30% return. So that's basically the play that I made. And it was a decent play. We always like 100% runners, but you got to be satisfied with decent gains. So I'm happy with it. If it would have ran another 1,000%, but when you start seeing these double tops, triple tops, and these resistance levels, you got to get ready to get out, because eventually it's going to dump on you. So yeah, intrinsic. What were you thinking on this trade?
Yeah, so basically what I was thinking when I got into this trade, Greenwood's brought it to my attention pre-market. So once it brought it to my attention, I just started paying attention and identify support and resistance and drew trend lines. Typically, when I play stocks that are pre-market runners, I typically don't play them pre-market. I like to play them as soon as the bell opens. But my rule is I like to buy what I call like first and second pullback. So basically, what I did as soon as the market opened, the stock ran up to 16, around 1630. In my mind, I know 90% of the time, once out of the gate that it gaps up like that, is typically going to sell out at some point. So my thinking, I knew it had strong support at 1388, so I just kind of waited. And so as soon as it pulled back, I put in my buy order. I didn't get filled to around 15 or so. So once I got in at 15, I just let it ride out. And so it ran up and got halted. So typically what I like to do, as soon as I'm in the profit, for the most part, I'm putting my stop where I bought it. And that's just because for me, it's better to get stopped out and break even than to get stopped out for a loss. Mm-hmm. So that's just my mentality. So as soon as it got halted, I put in my stop where I bought it. And then I already anticipated there was some strong resistance around 20. And one of the things I pay attention to, typically if a stock's gonna break strong resistance, it's gonna really blast through. It doesn't really, if it's kind of tiptoeing, going, if strong resistance is at 20, if it's going, 20, 50, and 21, and not really sustaining and holding that level and keeps pulling back, it's probably not gonna break. Because typically if it's gonna break out, it's gonna hit 20, then it'll pull back, and it'll go to like 25, and then from that point 20 will become support, and then it'll hold that level. It wasn't doing that, so I noticed like it tested it once, pulled back, tested it again. So the whole time it's doing that, I'm steady raising my stop, because in my mind I'm thinking, yeah, it's not gonna break, because usually it would have blasted through by now. So I moved my stop up. I got stopped out around 1980, and I mean it was a quick, easy play. Probably I was in that play probably all of 10 to 12 minutes, and made a quick, a little bit under 30% return. So all in all, it was a quick and easy play. It's just plays like this, you have to go in with the game plan, you can't really wing it. You kind of got to know what you're going to do and what you're looking for. And if you do that, I mean, it's easy money.
Yeah, yeah. So basically, yeah, I just for people watching, we put a stop. Well, I used to call it trading for free. So one thing that you can practice, this is free. This may be $1 million worth of advice. When you enter a stock, as soon as you get profitable, even if you're not profitable, you want to put a stop where you bought it. So if I'm buying at 15, I put my stop loss at $15, and that way I cannot lose any money. Of course, unless it's something crazy happens and it gaps down, but then you'll still get filled somewhere close to where you put the stop. So that I like to call it trading for free. So what he's referring to is putting a stop limit in order to sell his shares, where if the stock pulled back where you bought it, and that way you're never in danger of losing any money. And then we also talk about moving the stop up. So, I put a stop in, but once it goes up to $20, I don't want my stop still down at 16. I need to move it up to around 19. That way I lock in some of the profit. So that's what we're referring to. This level of resistance, we're talking about, it should be broken. Okay. Once it hits this level and hits it again and taps it, unless there's a huge burst of volume, it's not going to break it and it's going to end up selling off. So remember that. I mean, you'll get caught hoping and wishing, and then you're going to get this big red bar and you're going to be real upset, because once the volume dies, either the trade is holding those levels or it's over with. So anyway, that was a good trade. Thank God for it. I needed it. We needed it. Let's talk about just a couple more. The big one in OTC is RGBP. Yeah. So, I mean, I had this alerted to me by Antonio Johnson, and really, I'm always looking at those. So, for instance, I'm scanning all the time. This is my scanner. Nothing major. I'm always scanning. Okay. So I'm going to pick this up. I'm going to pick this up, but at the particular time, I was so focused on the very play that I didn't look at this, because when you got a lot of money in the stock, it's volatile, it's moving up, it's moving down, it's moving sideways. You got to watch it. So I just missed this due to being in another play, which is fine, because we're in a profitable play. You can't catch all the runners. So the great thing is trading super technically. Like, it gaps up about 100%, and then we go bull bar all the way up, a slight little pullback. Once once the stock pulls back, let me change my drawing tool. Once a stock pulls back and it holds a certain level, again, you can put your money in on the first dip or the second dip. Okay. So you see this dip. Once you get big volume again, you know that the stock should continue. So, hey, at one point it was up 1,000%, I believe. I always say it only takes one. Focus on quality, versus quantity. All you need is one of these a week with some size, and you're good. You don't have to worry about being in and out, all these traders or day trading and scalping and stuff. You don't need that. All you need is to get in a position where you're profitable immediately, trade for free, put the stock where you lock. So you're trading this stock, you buy it a little high because it ran up pretty fast. You say, hey, and it had a big catalyst. It got some news on a cancer, rheumatoid, or they got all kind of stuff, but the in particular product had some really good news, and an 8K was filed, which is a buyout, a definitive agreement. So, it made the stock a lot more valuable than it was. Let's just say that. The next thing you know, we start running. If you just put your stop in anywhere on this level, you never get stopped out. I always use the moving averages, okay, because they provide support and resistance And if it never breaks the moving average or barely breaks it just temporarily, then you got a good stock and you don't have to worry about the volatility. So this is a textbook trade. You need to start thinking about taking profits at least somewhere around here. I would probably be looking at this level, and then once you get here, you just got to be, you just got to be satisfied with a big win, or you need to be putting a stop in so that if it does go below, then you'll go ahead and sell out. But those were the two biggest plays. You got anything to add on this one?
Yeah, just kind of reiterating what you were saying. Plays like this are the kind of plays you want to be in because they're trading very technically sound, and it just makes it a lot easier to predict the price action. And so when you can identify that, when you find a play like this, that I mean, because like for me, I always like to buy first and second pullbacks. I mean, the first pullback came right back to support. That is easy money. You just buy support, but you stop a little bit below that, and you kind of ride it out. But yeah, when you can identify a stock like this that moves this big and trades technically sound, those definitely are the kind of plays that you want to be in. Because like I said, it's easy money if you just follow the rules, buy in, put your stop below support, and just let it ride. And always take blocking profits when you can and sell in the stream.
Yeah, definitely. So I mean, I'm always saying, because I know people are taking my trades. I mean, hear people, I talk to people. Hey, I took this trade, and I find out y'all are buying way higher than you should. But because I try to provide quality stocks, sometimes you make money. It's not the right trade if you miss a good entry. Okay, I understand you make money, but again, trade smart. If you do happen to get in on a crazy level when it's up 700%, just make sure you put your stop super tight, and that way if it does pull back, then you'll get stopped at. But always trade smart. Don't chase these stocks. I mean, I'm gonna have to keep saying it over and over because y'all may see me make these calls and something may run from $20 to $100 like UTME, but it's not a good interest, not a good trade if you're chasing it. Okay. And eventually you're going to learn a hard lesson, just like I've learned, just like everybody's learned. But that's another story. So, yeah, I think just a couple of stocks. I think Rice was looking good today. Um, nice little cup and handle here, and then and just a big run up. But again, I don't normally trade pre-market. Something was really enticing about Berry, so we jumped in. And then CMMB was another beast. Like this stock, and therapeutics. The theme therapeutics may start popping. I noticed several months ago, every stock with the name therapeutics was running big. Okay, so maybe something. But when you see a stock that had no volume start to get volume and get some consolidation like that, eventually you're going to see a big volume spike, and the next thing you know, we're going from 40 to 72. Again, make sure you take profits and trade smart because it's going to pull back or fall completely off on you. So that's pretty much it. Tomorrow's Friday. The market's normally slow, so don't expect too much, but always be ready to pull the trigger. Don't be afraid to be content with your gains this week. You don't want to just jump into trades just because you're bored, or sometimes the best thing to do is just sit on your hands and wait for a great setup. So got anything else to add to that?
Now I'll just go ahead and say too, and one thing that I've learned just through experience is that if you do want to get in a play and it's up big, just put in a tight stop. Because I mean, if you get stopped out of a play, you can always buy back unless you're close to the pattern day trade rule and you're out around chips. But other than that, so always keep that in mind. So if there is something you want to get in and you're really bullish on it, I mean, always protect your capital, have a tight stop, and then if you get stopped out, just be ready to pull the trigger again when you find a good entry.
Right. So basically, when they're say I'm buying this stock up here for everybody that's kind of new, when you buy here, even though you have no business buying here, y'all do because you tell me. Buy here when it runs up. Make sure you put this stop so when it does pull back, then you'll go ahead, you'll be stopped out where you bought it at, or a really small loss, or just take quick profits. Your stop is here. If it wants to keep running up 70, 80, 100, move your stop up and then you're good. But either way, you just want to don't hope and wish in the market. Hope is a horrible thing in the stock market. Wishing is even worse. So make sure you have a tight stop, like Intrinsic said, and trade smart. I mean, it's real money. You know, you want to put yourself in the best position possible. So that's going to be it for the market recap. We're going to try to do these pretty consistently and add value to you guys trading. Remember, we are available for one-on-one coaching. And if you want to join our Discord group, we exchange a lot of ideas there, lots of great traders there. And yeah, God bless, and we'll see you on the green side.